Hi guys, today's strategy is the one that incorporates a couple of ingredients, couple indicators. One of them is the RSI, and the thing is that we will not use the RSI in the typical way. We will also look at the overbought and oversold zones. We will not change any settings of this indicator, but we will just interpret its signals a little bit different than the usual. The strategy also contains two more indicators, and I will talk about them later on. But now let's add the RSI indicator and discuss what we are changing in the interpretation of its signals. So let's go to the indicators, type RSI, relative strength index. Let's delete this yellow moving average line. Okay, so now, typically when we use RSI, of course, we are looking at the overbought and oversold zones, right? Because the RSI measures the momentum of the price, which means that when the RSI indicates us that it crossed the 70 line, it indicates us that the price is currently overbought and it loses its momentum, and most likely it is very probable that the price will reverse in the opposite direction. So now the same thing applies to the oversold zone, which means when the price goes down, the RSI indicates us that the price crossed the line of the RSI, crossed the 30 line to the downside. It indicates us that the price is currently oversold, and most likely soon it will reverse in the opposite direction. So that is the standard interpretation of the RSI signals. So if you would like to conduct some strategy based on that, we would most likely add the 200 period moving average. So we have the EMA, let's change it to 200. Change the style to make it thicker, better visible. Okay, so typical strategy would go like this. We would look for the current trend on the market. To do that, to identify that trend, we are looking for the 200 period moving average. And in that moment, the price is below 200 period moving average, which means it is a downtrend, right? So if we have a downtrend, we are looking for the price to lose its momentum and make a correction. And it did, for example, over here. We had this small moment, short moment, when the price went into the overbought zone, which means it made a correction, it lost its correction move momentum, and therefore the trend most likely will continue, right? So now let's go to that moment. Let's mark it so you know we are talking what we are talking about. We are talking about this moment over here. The price is below the 200 period moving average. And so it went to the downside, and all this occurred at the closing of this green candle. So we are entering at the closing of this candle, or open at this red candle. So mark our trade over here, and stop loss. Typically, we are looking for the closest swing low. So those levels here are too low for us. We need to check the closest one, which is this one. We can clearly see the swing over here, and we are setting our stop loss slightly above that level. Risk reward ratio 1 to 1.5. Okay, so we can see this example was profitable, and you know what I have in mind. So we are in a downtrend, we are looking for the overbought zones, and in an uptrend, we are looking for oversold zones. So yeah, that's the typical point of view as for the usage of the RSI. So now let's talk about the current one that we will use today. And it's a completely opposite one. So when we have a downtrend, we are looking for the price, for the RSI, to indicate us that the price is crossing into the oversold zone, which is a confirmation for us that the price has a strong downward momentum. So you know that where the change is, we are not looking for the possible the possibility of losing its momentum that is currently too strong. It is the opposite way, that when the price goes into this oversold zone, it means that the momentum is so strong that it breaks through, and the trend is strong and it will continue. So now let's look how it will work. We have the situation over here. The price is below 200 period moving average. So yeah, you can see the 200 period moving average is also one of the ingredients of this strategy. So yeah, it is down below the 200 period moving average, and the RSI indicates us at the closing of this candle that it went into oversold zone. So now we know how we will use the RSI, but now it's time for the last ingredient, and this ingredient is Ichimoku Indicator, but not full Ichimoku Indicator. We will use just the Kumo Cloud. And why the Ichimoku Indicator, you ask? Well, it will help us to filter false signals that will pop up during the trending markets. So now let's add that to our chart. We have the Ichimoku. The settings, we are leaving at default. Now we need to just delete all the unnecessary things. So we are just leaving the Kumo Cloud. And now another filter for us is the Kumo Cloud. When the price is below the 200 period moving average and below the Kumo Cloud, then we are looking for only the sell signals, which means we are looking for the RSI to cross the oversold zone. But additional thing to filter false signals is inside the Kumo Cloud, which should be red if we are looking for short signals, which means this signal, technically it would be profitable, but we would not take it because the Kumo Cloud is green. We would only take this one, yes, this one over here, because the price changed, the cloud changed its color over here into the red one, or over here when the Kumo Cloud was clearly red. So yeah, and the opposite direction it goes the same. So we are looking for the price to be above the 200 period moving average, above the Kumo Cloud. The Kumo Cloud needs to be green, and the RSI needs to cross into the overbought zone. So now let's talk about a couple trades. And the first one is over here. We have the moment. Yep, at this candle, we went into overbought zone. The price is above 200 period moving average, above the Kumo Cloud. So let's mark that long position. Below the nearest swing, we can see that clearly here's the one. Here's the one, 65 pips. 1 to 5 risk reward ratio, and we can see clearly that this example was profitable. So now maybe let's look for a couple more. So yeah, this one, it was even 2 inside 1. Okay, so let's delete this one so it would be better visible for us. So we have another crossover into the overbought zone over here. Clearly we can see the stop loss and mark 1.5. And this one barely, but still profitable. No, it would be also profitable over here. So you can see that it can happen that it will give you a couple signals inside one bigger move. And another advantage of this strategy compared to the traditional one is depicted in this situation over here, where we had crossover even of the Kumo Cloud, crossover of the 200 period moving average, the confirmation that clearly it is an uptrend, but still from the RSI, as you can see, no entry signal. So the price would make this whole movement without us, without any of our trades. So yeah, you can see that it has its advantages over the traditional interpretation of the indicator. So now let's discuss a couple more examples. So you can see, for example, over here what I was talking about, why we are using Ichimoku. We have the clear, we can say, sideways move. The Kumo Cloud is changing constantly its colors. The price is moving around 200 period moving average, and for example over here the price is above 200 period moving average. The RSI shows us overbought zone, but the Kumo Cloud is red, therefore we are not entering, and it would be a good call, because even if we set, you can see that it would be a losing trade. So we would enter over here, stop loss over here, 1.5, doesn't matter, but you can see we would be stopped out over here. So that is why we are using Kumo Cloud over here to, don't get caught up inside those sideways moves. And as you can see over here also, the price went into oversold zone. We are clearly below the 200 period moving average, which means technically it is a downtrend. We are in the oversold zone, but the Kumo Cloud is green, and therefore we would not enter. And again, it would be a wise choice, because as you can see, we would enter here. Even if we would set our stop loss over here or even here, either way, it would be a negative yielding trade for us. Okay, so now let's discuss the results of the backtest. So the time period which I was analyzing was from January 2021 till February 2022. So you can see it is around a year, 13 months. And the currency pair which I was backtesting was Euro JPY M30 time frame, and the win rate of this strategy is 48%, which means that if we calculate the constant, we can say the fixed risk per trade, it would yield us a 20% gross profit. It is also without any commission, without any spread costs, so on and so forth. Therefore, we can say it's not the best. We can say average, because it is 20% minus those costs. It will be around 15-16%, something like that. So it is not the best, but it is also not the worst. It could have been better. So as for the, we can say, improvements that we could make to make this strategy work better are stuff like this. That, for example, we could use the divergence, and therefore to spot moments when the trend is ending. So divergence could help us to determine the moments when, for example, when we get the signal in order to entry in the direction of the trend, we could consider not taking this trade, because it would be a negative yielding trade, because in a moment the price could reverse. So for example, like we got over here, maybe not here because the signal was over here, so most likely it would be still a profitable one, but the divergence we had over here. So you can see that the price is making lower lows, but the RSI is making higher highs. You can see it over here. The divergence it's the opposite direction to this one. So we can see that the divergence many times can help us determine moments when the price will reverse. So you can see over here it would save us from the bad trade, because over here we got another signal. I don't know if you can see that. Over here the RSI went inside the oversold zone again at this candle, which should indicate us entry signal, because we are below the 200 period moving average. The Kumo Cloud is red, therefore all set for the short trade. But if we would took it, you can see what would happen. Even if we would be setting our stop loss over here or something like that, it would be a loss over here. Therefore, that's the first thing. And the second thing is, of course, major supports and resistance at which we should pay extra attention to. So yeah, that is all as for this strategy. I hope you like this one. Thank you for watching, and yeah, I'll see you next time. Take care, guys. Bye bye.